Hi students, so now we know the country and the hairdressing industry from the previous video. Now let us understand DKK as a business. This is where the pre-scene starts becoming much more useful for the actual exam because DKK is not just a salon chain. It is a premium service business with people risk, digital weakness, governance questions, supplier dependence, sustainability pressure, and some interesting performance signals. So in this video, we will walk through the rest of the pre-scene carefully. The business structure, ownership, board, stakeholders, brand positioning, services, products, systems, risks, values, revenue graphs, cost graphs, margin graph, client retention, staff satisfaction, and retail mix. The aim is simple. By the end, you should not just know what DKK does. You should understand what each fact means in SBL. Let us start with the business identity. DKK stands for Dennis and Coco, and it is a premium hairdressing chain in K-Land. The business was started 40 years ago by a husband and wife. They met while working in the same hairdressing salon and then decided to start their own business because they believed there was a gap in the market for a more luxurious hairdressing experience. That background matters because DKK is not positioned as a low-cost salon. It was built around premium service from the beginning. The business has grown in two ways, organically and through the acquisition of individual salons and small chains. It is now the third largest hairdressing business in K-Land with 50 salons. But remember the industry context from the previous video. DKK is smaller than Halo Hair and Trims, but that does not automatically make it weaker. DKK is playing a different game. Halo Hair has scale. Trims has basic low-cost service. DKK has premium differentiation. That is an important SBL point. DKK's strength is not being the cheapest or the biggest. Its strength is being trusted as a premium brand. Now let us look at the scale of the business. At 31 March 2006, DKK had 50 salons. It had 390 hairdressers. These are the core service providers. They are the people who create the hairstyle, build client relationships, and protect the premium experience. It had 155 assistants. These assistants wash clients' hair, support the hairdressers, carry out lower skill tasks, and learn on the job. They are also the future pipeline of qualified hairdressers. It had 60 receptionists. This is important because premium service begins before the client sits in the chair. Booking, greeting, refreshments, payment, and the first impression all matter. And DKK also had 62 head office staff. So in total, this is around 667 staff. That tells us DKK is a people-heavy business. The salons, products, and brand are important, but the customer experience is delivered by people. So when you see staff shortages, falling staff satisfaction, training requirements, union membership, or internal promotion, do not treat those as small HR points. In DKK, people issues become service quality, revenue, reputation, and retention issues. Now let us talk about ownership and governance. Dennis and Coco are still the majority shareholders of DKK. The remaining shares are owned by family members and several other private individuals. This tells us DKK is privately owned and not listed on the K-Land Stock Exchange. Private ownership can be a strength. It may allow long-term decision-making, brand protection, and less pressure to chase short-term market expectations. But it can also create governance concerns. The pre-scene says, DKK's governance arrangements are consistent with good corporate governance. But then it tells us something important. Because DKK is not listed, the directors decided not to have audit, nomination, or remuneration committees. That is a very examinable point. No audit committee may weaken oversight over risk controls, internal audit, and financial reporting. No nomination committee may weaken board succession and independence. No remuneration committee may weaken transparent reward decisions, especially in a people-heavy business. Another point, the internal auditor reports to the finance director. That reduces independence because internal audit may need to challenge financial controls, systems, and management decisions. Reporting to the finance director may limit that challenge. So your SBL judgment should be balanced. DKK says it follows good governance, but the structure creates questions about independent oversight and challenge. Now let us map the board and structure. The board includes a non-executive chair, a chief executive officer, a creative director, a finance director, an operations director, a marketing director, and a human resources director. This structure tells us DKK has functional leadership for finance, operations, marketing, and people. It also has a creative director, which makes sense for a premium hairdressing business. Creativity and brand experience are part of the product. DKK's salons are divided into 5 regions. Each region has a regional manager, and each regional manager reports to the operations director. Each salon is managed by a salon manager, but salon managers split their time between hairdressing and management. This is important. They are not only managers, they are also service providers. They also report to and are closely controlled by regional managers. The pre-scene says they have relatively little autonomy. That creates a possible tension. Close control may help consistency across the 50 salons. That is useful for a premium brand. But low autonomy may reduce local responsiveness. A salon manager may understand local clients, local staff, and local demand better than head office or a regional manager. DKK also has a policy of internal promotion to salon manager where possible. That can be good for motivation and culture because staff can see a career path, but it can also create a skills gap if promoted salon managers are technically strong hairdressers but have limited business knowledge. In SBL, this links to operations, people management, control, culture, and training. DKK has many stakeholders. The obvious ones are clients, staff, shareholders, and the board. But there are others too: suppliers, the Hairdressing Standards Association, the National Hairdressing Union, national and local government, and local communities. This matters because many SBL requirements are really stakeholder questions in disguise. If DKK introduces online booking, clients are affected by convenience, staff are affected by new processes, and management is affected by data and controls. If DKK changes working hours, staff and the NHU become important. If DKK changes suppliers or sustainability practices, clients, suppliers, local communities, and the HSA may all matter. If DKK has a health and safety incident, clients, regulators, staff, the board, and the HSA become relevant. So do not only think of DKK as selling to clients. Think of DKK as sitting inside a stakeholder network. That will help you write better recommendations because you will consider who needs to be informed, consulted, protected, or persuaded. Now let us understand DKK's brand. When Dennis and Coco started DKK, they wanted to provide a more luxurious experience than other salons. That premium position still defines the business. The pre-scene gives several features that differentiate DKK from the 2 largest chains in K-Land. First, DKK has luxurious salons with premium facilities in prime locations in wealthy neighborhoods. Second, it provides high-quality personalized client service. Third, DKK requires expert hairdressers to hold the full complement of HSA qualifications and meet high CPD standards every 12 months. Fourth, DKK has exclusive product partnerships with prestigious brands. This is a strong premium package. DKK is also the most well-known premium hairdressing brand in K-Land, and loyalty to the brand is strong. Its clients tend to come from the wealthiest demographic in K-Land, and they are willing and able to pay premium prices. This also means DKK is more protected from economic downturns than many other hairdressing businesses. But there is a warning here. The pre-scene says an expanding regional chain and more individual salons are successfully replicating some or all aspects of DKK's offering. That means the premium gap may be narrowing. If competitors can copy luxury interiors, personalized service, and skilled hairdressers, DKK must keep improving. The brand cannot stand still. DKK's salons open from 0900 to 1700 Monday to Saturday. that is 6 days a week, which fits the pattern for regional and national chains. DKK does not accept walk-in appointments. This supports premium service because appointments can be planned and clients can receive attention. But it may also limit revenue from spontaneous demand, especially because DKK salons are in prime locations. New clients are offered free of charge in-depth consultations before their appointment. This is one reason DKK salons have excellent HSA ratings. The consultation allows clients to explain how they want their hair to look and allows the hairdresser to assess hair type and give personalized advice. Regular clients have shorter consultations at the start of the appointment. DKK's services include tailored haircuts, customized coloring, perming and straightening with the greatest care, specialized hair care products, and top quality premium styling tools. All DKK salons can offer the full range of services because the number of staff and their skill set is approximately the same in each salon. That supports consistency, but it may also reduce local flexibility if different areas have different demand patterns. For SBL, the point is that DKK is selling a controlled premium experience, not just individual hairdressing services. Now let us look at the service process. The process starts with an appointment booked by phone or in person. For new clients, there is a pre-appointment consultation. Where relevant, DKK carries out pre-appointment patch tests. That matters because some hair products contain chemicals that can cause allergic reactions. Then, the client is welcomed, usually by a receptionist. Existing clients have a shorter consultation at the start of the appointment. Then comes the in-salon experience. After that, hairdressers make product recommendations. Finally, the client checks out and pays. This is useful because it shows where DKK creates value and where risks can arise. Booking problems can damage convenience. Patch test failures can create legal and reputational risk. Poor welcome can damage premium perception. Weak product recommendations can reduce retail sales. Poor checkout experience can weaken the final impression. So the service process is not just a diagram. It is a control map, a customer journey map, and a risk map. Retail is a small percentage of revenue, but strategically important. DKK has exclusivity contracts with two very large internationally recognized organizations. One contract is for hair care products and one is for styling tools. These exclusivity rights mean only DKK can sell these items in K-Land. That is a strong differentiator. It gives DKK something competitors cannot offer, at least in K-Land. DKK aims to obtain 6.2% of total revenue from retail sales. It achieved this KPI for 15 consecutive years, but in the year to 31 March 20X5, the proportion fell to 6.1%. That may look tiny, but in SBL it matters because retail margins are much higher than service margins. DKK expects hairdressers to recommend products to all clients, and the trust between hairdresser and client means recommended products are usually purchased. However, there is no commission for hairdressers on retail sales. That could be a motivation issue. If retail is strategically important, DKK may need to consider incentives, training, targets, or better product recommendation data. Also, DKK does not sell products online. That is a clear missed opportunity, especially because some non-clients already visit salons simply to buy the products. The salons are a key part of DKK's premium offer. DKK owns the buildings of some salons but rents most of them. Each salon has a similar size, layout, internal decoration, fixtures, and fittings. That helps protect brand consistency. Premium facilities include luxury reception areas where clients are personally welcomed, offered refreshments, and can browse retail products. DKK aims to refurbish salons approximately every 3 years. That helps maintain the premium look and feel, but it also creates cost and disruption. DKK also has supplier dependencies. Apart from the two exclusivity contracts, DKK sources branded uniforms, towels, and robes from a supplier based outside K-Land. Individual salons contract with local small laundry businesses, which collect towels and robes at the end of each day and return them washed, dried, and ironed a few days later. So the cost base is not only labor, it includes rent, utilities, refurbishment, products, styling tools, branded items, laundry, and supplier logistics. This matters when we later look at the cost graph and operating margin. This is one of the biggest business issues in the pre-scene. DKK is a premium brand, but its systems are not premium. Appointments are still recorded in paper appointment books. Clients must book by phone or in person. There is no online booking. Salons do have computerized client records which show the services clients have received and the specific products used on their hair. That is useful data, but inventory is still manual. Salons record retail inventory manually and email head office with what they need. Head office then places orders with suppliers. DKK's website provides information about the company, its ethos, its service offering, and its 50 salons. But there is no functionality to book appointments online and no functionality to buy retail products online. Individual salons also use social media only on a limited basis. This creates a major mismatch. DKK sells premium service to wealthy clients, but the digital experience is behind what clients may expect. In SBL, this links to operational efficiency, client convenience, no-shows, double bookings, inventory control, retail growth, data protection, cyber risk, and change management. DKK maintains a risk register. The key risks currently listed are competition from existing and new businesses, lack of suitably skilled and experienced staff, damage to reputation, for example from health and safety incidents, energy and water price volatility, sustainability concerns of clients, availability and price of products supplied under the exclusivity contracts, and limited use of social media. This list is very useful for the exam. Each risk can be turned into an impact and a recommendation. Competition links to differentiation and brand protection. Skilled staff shortages linked to recruitment, retention, training, and service quality. Reputation risk links to health and safety controls. HSA ratings and client trust. Energy and water price volatility links to margins and sustainability. Supplier availability and price linked to exclusivity contracts and product dependence. Limited social media links to marketing, recruitment, client engagement, and brand relevance. So do not just memorize the risk register, use it as a map for answers. Now let us look at the website extracts. DKK's mission is to provide clients with an indulgent and luxurious hairdressing experience while creating a hairstyle as individual and stunning as they are. This supports premium differentiation. Its vision is that the Denny's and Coco brand evokes the very best in hairdressing. Again, that is a premium positioning statement. Its values are commitment, integrity, citizenship, happiness, and sustainability. Commitment means surpassing expectations every time. Integrity means being honest and transparent with clients and with each other. Citizenship means caring about communities. Happiness means making clients and each other happy. Sustainability means protecting the natural environment. In SBL, do not simply repeat these values. Test them. For example, if DKK says sustainability is a value, where are the sustainability KPIs? What is it doing about water, electricity, plastic waste, cotton wool waste, and chemical disposal? If DKK says happiness matters, why is staff satisfaction falling? If DKK says it surpasses expectations, why does it still have no online booking? That is how values become analysis. Now let us look at the financial graphs. The figures in the pre-scene are shown as charts, so we read the trend rather than pretending we have exact financial statements. Revenue increases from about $16.1 million in 2021 to about $19.2 million in 2025. So at first glance, revenue growth looks positive, but then look at total costs. Total costs rise from about $14.1 million to about $16.6 million. The issue is especially in 20x5. Revenue rises only slightly, but costs rise much more sharply. That is why the operating profit margin matters. the operating profit margin improves from around 12.4% in 20x1 to around 16.8% in 20x4, but then it falls to around that percent in 20x5. That is the big warning sign. So the story is not simply DKK is growing. The better story is DKK has grown, but the quality of profit weakened in 20x5. Possible causes include labor cost pressure, energy and water cost increases, product cost increases, refurbishment costs, lower appointment utilization, no-shows, weaker retail mix, or poor manual systems. In SBL, always connect the graph to a business cause and a business response. The non-financial graphs are just as important. Client retention rises from about 81% in 20x1 to 84% in 20x4, but then falls back to 81% in 20x5. For a premium hairdressing business that is serious, DKK depends on repeat clients, trust, relationships, and brand loyalty. A fall in retention may indicate higher prices, appointment inconvenience, competitors copying DKK service inconsistency, or clients following hairdressers elsewhere. Staff satisfaction also weakens. It is around 85% in 20x1, then moves around 84 to 85% and falls to about 83% in 20x5. Again, that matters because staff are the product. If hairdressers are unhappy, service quality, client relationships, and retention may suffer. Then look at revenue split. DKK's target retail revenue share is 6.2%. It achieved this for 15 years, but in 20x5 it fell to 6.1%. That is small numerically but important commercially because retail margins are much higher than service margins. So the non-financial warning signs support the financial warning signs. Retention falls, staff satisfaction falls, retail mix weakens, and operating margin falls. That is a nice connected SBL analysis point. So what is the overall business diagnosis? DKK is not a weak business. It has a strong premium brand, wealthy clients, excellent HSA ratings, skilled hairdressers, luxury salons, exclusive products, and a 40-year history. But the infrastructure supporting the brand looks weak. Paper booking does not fit a premium client experience. No online retail does not fit exclusive products. Manual inventory does not fit a chain with 50 salons. Limited social media does not fit an industry where hairdressers can build reputation online. No board committees do not fit a business facing digital, people, supplier, and sustainability risks. Falling staff satisfaction does not fit a business where people create the value. And the 20x5 performance graphs show that something is under pressure. So the core SBL story is this. DKK has a strong premium position, but it needs stronger systems, governance, people management, and sustainability evidence to protect that position. That is the lens you should use when analyzing proposals in the exam. So that is DKK as a business. You now have the country and industry foundation from the previous video and the business foundation from this video. A detailed written explanation of DKK as a business is available on revvipro.club. In the next video, we will map the country, industry, and DKK into different SBL models and headings, including PESTEL, SWOT, Porter's 5 forces, value chain, stakeholders, risks, and strategy. Stay tuned for that. And if you want a particular model explained first, drop it in the comments.